and a ton of kind of conflicting geopolitical news that is floating around. And what is reassuring is that we have a way to measure the outcome of these conflicting narratives. You have unemployment claims rising, so claims for people losing their jobs rising. We have personal income that is actually falling, and this is 13 days delayed, but that is a disinflationary trend, and you would perceive that as if there's in that number there's no fear of inflation. Personal spending, though, 0.5. We have news at 10 o'clock with final wholesale inventories, but the real kicker here is where the Fed fund futures end up as we're going into the reopen here. And I'd say in the first 30 minutes, we're just going to make a mental note of 39.4 for the September 15th meeting. And you'll notice that these rate cuts, they were on September yesterday afternoon, and then this morning we saw another rate cut pop into this table. And so market participants are now perceiving that the Federal Reserve will have now cut rates multiple times in 2027. The most important chart is crude oil, and we're up against this resistance level. And one could make a case that there's also an all the way halfway back short above us as well too. But this is the extension that we know of. And yesterday, as we were coming into our afternoon, we had broken through a short setup, and that created this little long as we were coming out of the daily doldrums. And it defended, and we ripped to and through a profit target. Well, that created an extension. And that's the support level that we were looking at here this morning as we were going into the pre-market time frame. Crude oil defended not only the front run of the extension, but the previous high. And so old resistance became support. And this crude oil setup, if it continues to defend and we keep grinding higher, that is essentially the ceasefire failing, the war re-escalating. And I think that obviously you can see that happening when you're looking at narratives developing out in the world. But we also need to know where that narrative changes, because the narratives, they always exist at all times simultaneously. If crude oil were to break these extension long levels that we're in, what that would mean is that the indices were going to scream back higher, because the perception of crude oil rising, again, pushes or pulls the rate cuts into the future. And obviously, if we're rising and that's being pushed out further into the future, the indices are going to go down. So crude oil up, indices down. Crude oil down, indices up. And we have this little tiny extension here. And that's actually bearish for the indices to be defending that setup. Now, what do we have as far as the indices go, though? We're sitting inside of this massive extension that hasn't even traded yet. And we have this little saying that you can, in a range like this, you can trade the top of the range, you can trade the bottom of the range, but we need to be very cautious of the middle. And you can see how it's gotten tighter and tighter and tighter as we've gotten into the overnight time frame. Well, the gap fill statistics that we have here going into this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.